Alright, so before I continue any further, it's a good idea to summarize the different behaviors that have been encountered and really assimilate them, or learn. So over here what you had was a bounce here from a prior support level. So this is in a downtrend already at the top here, but what happened was price hit a low, hit a support level and bounced from it. So that's the first behavior here. We have low volume bounce from support. Basically, during a trend, you want to watch, during the downtrend, you want to watch areas of buying in the prior uptrend, and vice versa. Those levels at the prior uptrend are levels where you can expect a bounce. So watch for the bounce, and if they do bounce at a level, observe the volume that came in. If it's low volume, then it's just then the downtrend continues. It's more likely that downtrend will continue if the bounce from a prior level in the uptrend that preceded the downtrend, if that bounce is on low volume. The second is the dead center of the hinge. That dead center of hinge was right up here. And basically what this is saying is that you have to be careful because it can bounce really, really from this area you can have a big move. And you did, but it was on the downside. So this dead center, or that apex or hinge or whatever, that breakdown he observed and took the short position. Alright, so that's where he took the short position. Delete this. Okay, second is the concept of liquidating market. The liquidation of the market here was characterized by high volume. As you can see here, the market liquidated and price volume was increasing. So this is the characteristic of a liquidating market. Short covering. The short covering was exposed by a lack of follow through and the low volume pullback into resistance and terminated with a swing climax. This was your short covering bar. Right after that you had no follow through. Okay, so that was a big concern. And when it rallied here, when it continued after that down bar, it was on very low volume, which meant that buyers were not willing to buy the market. It's not genuine buying when you only have one bar of strength. So the subsequent bars were weak, and all it did was go into where the buyers were trapped. So that, which is basically resistance. When it went there, you had the swing terminate with a swing climax, which was confirmed by the immediate red bar after it. The low volume pullback basically showed that the buyers did not want to buy on the rise. So when you see a rally and then a rise, and you look at the rise as a pullback, on any type of pullback, if it's on low volume, relatively speaking, you have to really question it, because sometimes it's just a technical rally, or it means that the traders are not willing to buy from that area. Trap buyers. The trap buyers were up here, and these trap buyers created resistance, and that is where price went to. So trap buyers and sellers create support and resistance many times. Climax into support and resistance, that's what we saw. The shortening of the thrust with high volume. Shortening of the thrust with high volume is right here, where you see the market is going down, down, down. It accelerated into a hypodermic maneuver here, and then there was a shortening of the thrust from low to low. That is very important, because you have to ask yourself, what is that volume then? If it's not going down and there's a lot of volume, someone is holding the market. Hypodermics. The hypodermic behavior was a parabolic move that was part of the reason to get out of short positions. This move here was hypodermic. This move here wasn't. So this move here, whenever you have hypodermics or parabolic, what they call parabolic movement, be very, very concerned. Why? Because experienced operators are not going to buy the pullback because they don't want to buy or sell at bad prices. When you have a market that's going down and it goes parabolic down, that price is very low. So are they going to sell the pullback? Are they going to be there at such low prices? Are they going to sell low? No. So that's why parabolic movement is something that is very important and many times ends a trend. The COB bar typically occurs after the climax, and it's the biggest bar, or if it's a green bar, it should have the biggest volume of a lot of green bars, preferably out of all the green bars in the trend. But that is the change of behavior bar. We saw that bar right here. After the parabolic movement, after the climax, there was a change of behavior bar. Next is the secondary test. So you had a test. Usually it should be the secondary test of a climax, but I mean it could actually also be on a pullback. When you have high volume pullback followed by low volume pullback and then another low volume pullback, the market is typically ready to go. So the secondary test should be on higher levels on low volume, but there are times when you have a secondary test that actually goes lower. It just exposes there's no volume at the lower level, so it should be around the same level. It doesn't necessarily have to be at a higher level, but it should be around that level. Breakout long. The breakout long above the trading range with the high end close was the buy signal. You saw that right there. Right there. Right. That was also a buy signal. The SOT on low volume with selling in the background. The SOT on low volume with selling in the background. Top of the swing is a warning indication. So where did you have the SOT? You had some SOT up here. There was selling in the background here, heavy volume as indicated here. Write that, put that there. Right there. That was the biggest red bar in this, definitely in this minor trend here. From the low, I think that's the biggest, even more than the shortening of the thrust climax bar and the COB bar, which initiated the move. So you're getting that at the top. So that is a cause for concern. And the bars right after it are shortening of the thrust on low volume. So that decrease in volume gets you concerned, because it means that the prices are being bid up. They're being bid up artificially. Alright? That's important. So SOT on low volume with selling in the background, SOT on low volume with selling in the background on top of the swing is a warning indication, especially at a support or resistance level. And you see on the left hand side, there's resistance. There was a whole reaction. So it's going in there, encounters the high volume, shortening of the thrust, price bid up, low volume to that area, and then finally reverse. So these are the characteristics. I think about 14 of them. And if you do like a deeper study, you'll probably find more, but I think this is enough for now. And we'll be moving on to the next part of the study, which will cover this leg, this entire leg right there. So that's all, folks.